We've had a 2-day bounce in SPY, but can you trust it? Today, I'm going to be breaking down the SPY chart, and we're going to look at whether or not this is a bounce that can be sustained. Looking at SPY specifically, that's stock symbol SPY, and going to use technical analysis to determine whether or not the basing pattern seen of late can hold itself together, especially when tomorrow we are getting a big news conference at 4 p.m., right when the market closes, from the president talking about tariffs that has the potential to really upend the market. Now, one of the things that I've really noticed about tariffs, and this goes back to the 2016 to 2020 years, where there was also a lot of discussion about tariffs and their implementation, is that it's not so much the planned events that get you messed up. It's the unplanned events that the market doesn't see coming. And when there's a change in the narrative, or when there's something new, like a new tariff or a new country involved, that is typically what rocks the market the most, not these planned events. Doesn't mean that we couldn't see that happen tomorrow, but I'm talking about in general, the planned events seem to be less volatile than the unplanned events. So let's go ahead and look at the charts right now. Now, we've had a pretty decent 2 days in the market here. Now, it hasn't gotten us back above the 5-day moving average, and that is a concern. That's this little yellow squiggly line right here. And during the sell-off that took place after the February 19th all-time highs were established, there was only 1 day where we were able to actually close above the 5-day moving average, and then the following day, it just completely fell apart. So the fact that it's struggling some with the resistance right now at this 5-day moving average, that is a concern. Now, we were looking at the double top, and it confirmed the double top, and it broke down, rallied back up to the double top resistance or confirmation level, and then has started another move lower. Now, yesterday we actually formed marginal new lows, but it was one of those things where it was testing to see where the stops were, and then once there really wasn't a lot of sell action, we just started ripping higher, and we've been essentially pushing higher ever since those new lows were established. Now, we also have a bear flag here, and this bear flag has confirmed. And at one point, it was extremely steep, but it did flatten out some, which made it much more likable. And on top of that, the AVWAP line, some of you people might not know what it is. It's an anchored volume-weighted average price. And I like to attach it to key moments in the market, in this case, to when this sell-off began, which it was at the all-time highs. And what you'll notice is that we've consistently sold off at this level. Now, we tested it back on March 25th for 2 straight days, was unable to break through it, and then we had a subsequent 3-day sell-off. Now with this 2-day rally, the one thing that we haven't seen any of since the February 19th all-time highs were established is a rally that lasts beyond 2 days. We had 2 days back here in mid-March, and then another mini 2-day rally here that ended on March 25th. But we haven't seen any 3-day rallies. In fact, you'd have to go all the way back to February 6th to the last time the market rallied 3 straight days in a row. So the recent history is not necessarily on the bulls' side, so you want to keep that in mind. So with the double top, we confirmed, we broke down, we bear flagged right into the AVWAP, we broke down again, confirmed the bear flag, and now we're sitting right here at this 5-day moving average. So it becomes a question of whether or not the action of this 5-day moving average is going to be something like what we saw back on March 5th or March 7th, where we tested it, had a decent rally, but it was a quickly sold off the following day. Where it gets kind of a little bit concerning is that if this doesn't hold, we're starting to talk about now major support being violated. Now, we did violate it yesterday, but we held it into the close, and that's the most important part, is that it holds it into the close. Went below it, couldn't find enough sellers to keep that rally selling off or keep the sell-off going down, and it came right back up. So we're holding the support level. This is a key level. Now, let's take the bear flag off for a second, and what do we have? We have the potential for a double bottom. Yes, we have a double top over here. We have the potential in a much shorter time frame for a double bottom. Where does it confirm? It would have to break back above the March 25th highs. That's a pretty good ways away from now. If that confirms, then yeah, you do run the risk or run the possibility. It's a risk if you're caught short and you're not selling out, but you do run the possibility of it going back up to like 599, 600, where you start to get into some of this congestion again. There's a lot of congestion at the 600 mark. So those are the key points, but there's a lot of resistance overhead. Not only the double top confirmation, but the AVWAP, this little teal color here, and then this double top or the 200-day moving average as well. So there's 3 levels of resistance right there on top of each other that could push back on this market pretty heavily. So for this bounce to really get underway and to have a lot of confidence in it, it's going to have to break through 3 levels of resistance that have essentially converged together in the same area and break through all 3 of them, when in the past they have all acted as some heavy resistance for the market. Now, zooming out a little bit further, and this is what people don't ever like me talking about, but you got to talk about these things. The major support level going forward, yeah, it's probably going to be this line right here. This is the key level that I would be paying most attention to if we do break below this support level. And there's not a lot of support underneath this market. You could make the case that, well, maybe it'll come back down to these lows that were established back in April 2024. Well, if it does that, then you're also testing this level right here because they're pretty much right at the same level as each other. So again, there's not a lot of support for this market. If you break this support level, I think we ultimately do go down below 500. Doesn't mean that there won't be some bounces along the way, but it's a rough road at that point. If you enjoyed this video, I would encourage you to like and subscribe and let me know down in the comments below. What is your take on SPY right now? Do you think this thing rallies here? How do you think the markets are going to respond to the tariff talk that comes after the bell tomorrow? Let me know down in the comments below. Thank you guys, and God bless.